Hello traders everywhere, Adam Harrison here, co-founder of MarketClub with your 1 p.m. market update for Thursday, the 3rd of November. Well, Euro cuts rates, and what happened to 600 million that is missing? Euro cuts rates by 50 basis points. New guy in, Mario Draghi, with new rules as Jean-Claude Trichet is out. Now U.S. regulators are wondering what happened to $600 million in customers' funds under MF Global's care. I'm sure there's more to come on this, and I'm sure some people should be going to jail. Well, here we are. It's Thursday, and how the market closes today is going to be very important in my mind. If we see the S&P 500, for example, close lower, I think that will be a negative vote for the stock market. Conversely, if we see the bank stocks close lower on the day, I believe that's a negative vote for the banks. So what is gold going to do during all this crazy? So what's gold going to do during all this craziness? It's going higher. Since we started broadcasting, we have continually shared with you the long-term trend for gold, which continues to be positive. That came to the forefront today as more and more investors moved into gold, and also we had a short-term positive trade triangle today. What is interesting is that we're seeing net deposits coming out of banks both in Greece and Italy. This is a disturbing fact, and one that will eventually have to be addressed by private sector or government or both. What it does illustrate, however, is that money can move around pretty quickly when it wants to. We may have already seen a stealth run on the banks in both Italy and Greece. As I started this post, I mentioned how important it is to see where these markets close today, as it's Friday tomorrow, and we have a lot of nervous, trigger-happy traders who may not want to hold any positions this weekend. With the hedge funds largely underperforming for the year, you're going to see some hedgies, that's short for hedge fund managers, swing for the fences a la John Corzine of MF Global, hoping to make a home run and salvage a poor performance here. This will only add to more market volatility. Okay, now let's go to the charts and see how we can maintain and create your wealth in 2011. What you're seeing right now is you can win, if you're not already a member of MarketClub, you can win a 12-month subscription on a HP touchpad. You can enter today. I think you'll have a great opportunity. We have several of these to give away, so this is one of the first ones we're giving away. So go to the blog, check it out, enter, and win a touchpad today. I think you'll be happy you did. So let's go to the charts and see what's going on, and we're going to do that very quickly. And here we are. Here's our home page, and we're going to the markets. Now again, we have a plus 55 for the S&P, indicating a trading range. And if you look down to some of these other markets, we've got a minus 55 for copper, plus 70 for crude oil, plus 65 for the dollar index, and a plus 55 at Jeffrey. So it's still, a lot of these markets are still in trading ranges, but let's go and take a look at the S&P 500 and see where we are for the moment. Now this is a 30-minute chart, but I'm actually going to go on a daily chart. And let's just go to 3 months. And this is going to be a very, very important day. And what I was saying is the fact, here we are, we have a mixed bag. Longer term, we are negative on this market. And shorter term, intermediate term, we have an uptrend. So we have a conflict, therefore we have this 55 reading. And if we put on the Donchian trade channels, which we frequently do, and we put in our parabolics, which we can do, and you can see a couple of things here that I think are pretty important. One is we moved outside of the Donchian trade channel, which we mentioned last week. This was last Friday, and of course this was a very, very negative sign in my mind because it's a doji line in Japanese candlestick terms, meaning the equality in the sellers and buyers, but it was particularly negative coming from this big up move, and we had the big down move on Monday, and then of course Tuesday. So we covered back on Wednesday a little bit. We've covered back a little bit today. Now this is why I think it's important to see if we close lower for the day. If we close below, I think, the 1237 level, we're currently trading around 1248, 1249. If we close around 1237, that to me will put pressure on this market on Friday and potentially see us move down to these lower levels. It looks to me that we could potentially, and I'll put my telestrator on here, it looks to me like we could potentially see this market roll back down. We talked about rolling over here and roll back down to these levels around here. And the reason I say that is because this market's far from out of the woods yet in terms of our work. You've also broken the parabolic line right here. You can see these dots here that's coming up. That's turned around the market. And if we see this market here, this day come down and close like that, something like that, and then tomorrow we see the market come below the 1220 area, I think you've got a good chance of seeing this market come under pressure next week. No one knows what's coming out of Greece. I don't even think the Greeks know what's coming out of Greece, and certainly the euro doesn't know either. But this is where I think you want to look. These two sharp down days that took biggest down days we've seen in quite some time, back to back, I think definitely are important. And I think depending on how we close, and I just want to take this off the screen, clear this up so you don't have a mixed picture, but depending on where we close, you can see basically we had the signal at 1243 to be short-term seller, which gave us this signal right here. But we need to see this weekly turn negative. Now the 1220 line is a very important line, as we said, right here at 1220. If we close below that on Friday, I think you will want to be either out of the market, or certainly you want to be looking to maybe be short the market. That would be an indication for us that the market's turned around and you're going to see another push down. So that's generally speaking how we see the market. And if we scope this down further, we were overbought, and if we go further down, you can see this market just is so close to turning down in the MACD, which it turned up, as I say, quite some time ago. So if it turns down now, you're talking, well over a month in duration. So I think that could be a very important thing. Potentially, I think we could see this market all be negative until the end of November, and then we'll have to look at the game. But generally speaking, I think there's a lot of opportunities here, but it's very, very volatile. And if you can't stand the volatility, then you really shouldn't be trading the market right now. So let's go to our next market. And the next market we're looking at is, of course, silver. Silver gave a little signal today on the daily. The monthly basically is still negative. So it's a mixed picture, and it's kind of like a poor man's gold, I think, for want of a better word. I still think gold's a better bet, but some people like to trade silver, and if that's the case, then that's your choice. But generally speaking, it looks as though it may be wanting to go higher, but there's not a lot of enthusiasm. We've lost momentum here on the MACD, and certainly this level right here, we're looking at, I think the parabolic is 32.14, so it's a little ways away, maybe 2 cents, but I think if we see the market go below that level, it's not going to look very, very healthy. Now, the next market's a different picture. This is what we talked about before, and this is what we've talked about every week, is the fact that gold is a different picture. And you've got all of our trade triangles positive, which is great. You've moved outside of the trade triangles, but we've talked about the resistance around the 1770 level, which is a Fibonacci retracement. If we put that in real quickly, we can do that. That, to me, is going to be a very important level. 1770, 1772 is a 61.8% retracement. If we get back there, that may be enough to halt the market. But generally speaking, the trend is your friend. The trend has been up for a long time, since 1430 on our work. That's $1,430 an ounce. We're currently trading at $1,762 an ounce. Remember, this is live. MarketClub is live prices, and I think that's the important thing to look at. As we go down further, look at the other indicators. Yes, we are overbought. And yes, this is still looking healthy in terms of the MACD. So generally speaking, I think it's looking a lot better for gold than it is for silver at this point in time. Now, the next metal we're looking at is copper, December copper. And December copper does not look that great in the sense it's got a monthly down and a daily. The only one that's bucking the trend is the intermediate term trend, the weekly trend. But that looks as though we could potentially see this market under a little bit of pressure. And again, hasn't turned down yet, but it looks like it's flattening down to potentially turn down. But you really want to be patient and wait for that to happen, certainly around 340. And we talked about the 350 level as being very, very key support, which is right here. If we go below that level, I think that's a different situation. But again, I want to see how this market closes today. If we close lower on the day, now we're not that there yet, but if we do close lower on the day, let's say down towards the 350 level, even lower than 350, I think there'll be a lot of pressure on this market tomorrow, as traders will want to either even up or get out of the market for the weekend. But we can look at the, very simply with the MarketClub, it's very easy to do this. Simply go to the weeklies, and you can see the weekly we're lower for the week, but not dramatically, but we're lower for the week. So maybe this is a pause before we continue going higher, but I think you really want to be just a bit careful here. With the plus 55, it is suggesting a trading range. You're below the parabolic on the weeklies, and you're really in the midpoint of the Donchian trade channel. So I would just give this market probably a little more time before I would get excited about it. It really doesn't have any strong upward momentum in my eyes. So next market we're going to look at, I'm going to go back to the dailies, of course, and we're going to be looking at the crude oil. Now, crude oil was acting very well earlier today. It does have resistance, and I'll get this closer so we can make a sense out of it. It does have resistance right around this 95 level to 100. However, it's acting, this is definitely, we probably put in a trade triangle today, and yep, we did, and that's looking very good. But generally speaking, the longer term is still negative. I'd like to see that turn up. It's from 95.79. The market's trading 94.36. Very little. It's come up a long ways from $76. And the question is, if the economy continues to be slow, then you're going to see slow demand for this market. I think that's going to be the key. But generally speaking, I think it's a trading range, upper end of a trading range, maybe the 95 level to the 97 level is going to hold the market. But generally speaking, if we break out over this level and close really, really well tomorrow, I think we'll see perhaps some more upside potential there. But it depends on the equity markets and what goes on in Europe. I mean, that's really the bottom line. So next market, and that's going to be the dollar index. The dollar index had a nice pop from the lows here. We talked about this before. We've gone over the parabolic. We're up in the upper half of the Donchian trade channel. This type of formation potentially could be very positive. And what I'd like to see happen here is for this today market to see the market close right towards where it opened, maybe around the 77.23 level, maybe about another 50 points higher. I think that would be a little more positive than we're seeing right now. But generally speaking, we've had this. As long as we hold up here and we don't go below 76.50, I think we can still see this market push up to around the 78.50 area. So let's see how that plays out. And we've got one more market to look at, and that's going to be the CRB index. And this is going to be an interesting one. Obviously, CRB is largely affected by the crude oil. And you can see, just even if you just put a very short-term Fibonacci on here, just from the highs here to the recent lows, you can see basically we're pretty much there. Let me get a little closer if I can. And you can see we're pretty much in that zone where it should be finding resistance around the 320 area. I don't think there's too much to get too excited about. If we look at this on a weekly basis, you can see we're pretty much unchanged for the week. I think closing below 315 would be a negative for this market, and certainly closing below 313 would be a negative in my mind too. So lots going on. I think really pay attention to the way we close today, and certainly next week is going to be a very interesting week. But pay attention to the close today, and let's see this tomorrow and see what happens. But hey, if you're not already a Market Club member, enter to win a free subscription, a free 12-month subscription to Market Club on a touchpad. We give you the touchpad, and of course Market Club's included in that, and you have it for 12 months. The touchpad you have forever. We give you that forever. But enter today. I think you'll really enjoy the program and Market Club. So if you're not a member and you haven't been a member, enter today to win a 12-month subscription to Market Club. I think you'll really enjoy it. So, hey, this is Adam Hewison for Market Club. I'll see you tomorrow, same time, same place, right here on Market Club TV. Have a great trading day.